I come from physical commodity trading, and I just thought it was the lunacy of the inefficiencies in that market with all the technology we have today for brokerage markets. For example, if I knew I had a buyer in Dubai for a cargo of sugar, you'd call one broker for an intra-trade offer, you'd call your Thai broker, and then the Thai mills, you'd call your Brazilian broker, and then the Brazilian millers, directly. Then you'd call your freight broker and see which one, which is the best deal to source for that sale. And the lunacy of that, when you can create a marketplace to do all of that cash market trading in one spot, I had to go through with it and build the platform.
What were the steps to creating PanXchange?
My first thing was, to me, my proof of concept. Could I get a board of advisors that were highly respected in the industry and were willing to contribute their time? And that happened. In Excel, with words and pictures, I basically said, this is what I want the system to do. Found a technology person. I said, can you build this for me? And he was just interested in it. So he said, well, I want to try, and I want to see if I can do it. So that we had our beta, and I did design it for sugar, which turned out to be the best thing to happen in building the infrastructure of it, so we could scale across multiple commodities. And then we went into the pilot launch, and I had 8 of the world's largest trade houses around the globe, and it went phenomenally well. In fact, even though it was mock trading, they asked me to do a daily report, just how starved they were for some transparency in the cash market, and they asked me to extend it for a couple of weeks.
How did you get your funding?
All of the funding for the decade that this company has been in business has come from my network. The single biggest waste of my time in this company was trying to raise venture capital funding. The results I got was, great, Julie, take it another inning. Take it another inning. No matter how far I got, it was take it another inning. I created that beta launch, worldwide global sugar. And it was unbelievably successful with the proof of concept of the technology, of the team, of the market need for it. And they said, well, go get real revenue from this. Like, it's global trading. I need runway, guys. I need some cash. And that was my biggest frustration. I never had the resources I wanted to properly grow the company.
What was next for PanXchange after sugar?
Sugar, we never went live, actually. And the reason I didn't do that was because I realized that about 3 companies moved 80% of the world's market. And the last thing that those guys wanted was me offering transparency and liquidity to everyone else who was smaller than them. And I knew it was just not going to fly. So this is where I started learning, okay, where is our sweet spot? Where is our niche? I was a little demotivated after that because I thought, I have this great technology now. What am I going to do? And then I thought, let me put it to some good. And I got a grant to test it in maize and wheat in Kenya. And the long and short of that little project was that we expanded into Uganda and Tanzania and ended up trading over 30 different types of grains and beans in the region.
Is PanXchange still trading those markets?
Lessons learned there. And each market, there's always a bunch of lessons that we learned. When there's that much corruption in the region, a company like ours had no legal recourse to enforce our contracts. In fact, when we expanded into Uganda, my local person on the scene, Ronnie, the first trade we had was getting delivered to the buyer on a Saturday, and he went to meet the truck at the gate of the buyer, and he basically was held hostage. They said, if you don't pay us more money for all the grains on this truck, we're going to go take it down the street to somebody else. And that's when we realized the trading part, we just didn't have the resources. I did leave the benchmark pricing and reporting open, and having those guys in Kenya and Uganda still report the prices. And I kept it open as long as I could because I was really hoping that one day we could make some real social impact. But the reality is, when you have an agrarian economy that can't even get a basic warehousing receipt program up and running, it's just too broken. It's unfortunate, and I alone can't fix it. So we shut it down eventually.
What did PanXchange try next?
The success of expanding from Kenya into Uganda and Tanzania still wasn't enough for the venture capital community, so I knew I needed to do something closer to home. Our technology really thrives well when markets are opaque and they're fragmented, and also in markets where the word commodity is a misnomer. The reality of physical markets is that you have to negotiate every single variable, the quality, the quantity, the delivery window, the delivery place. Are you going to come and get it, or am I going to ship it to you? What's the price? And of course, all of that affects the total contract price. The messier, the better for our technology. And so feed grains really fit the bill for us. I was a little bit nervous because it was a mature market. But we decided to go ahead and do a pilot launch in U.S. feed grains. This was the major trade houses and feedlots in the U.S. And it went really well. It was off to a great start. We went from free trading in our initial period to fee-based trading seamlessly. There was talk of us creating the benchmark price that could become the financial settlement for a new derivative contract, which I thought was incredibly exciting. And unfortunately, it lasted for about a hot minute because we then went into one of the biggest gluts we've had in feed grain markets in 20 years, I think. And we learned that at a certain price point, even though we were anonymous trading, just the risk of people finding out what they sold it for, our clients just wanted to bury the trade as quietly as possible, and they just didn't want the risk of online trading at that point. We realized that the price of frac sand, yes, sand, believe it or not, a ton of sand was worth more than a ton of feed grains at that time. And the frac market was really taking off. So we decided that let's give it a go in frac sand. And that was our next market.
Where is the frac sand market?
It's for U.S. fracking. And what was exciting for us about this is that you can't get oil and gas out of the ground until you put the sand in. So we were very excited about our data and becoming a leading indicator for actual capacity of oil and gas. Turns out that's a little trickier than when we thought it was. Sand comes from basically two places. Up north, and it's a very white, clean sand. And then in the Permian Basin, there's a brown sand. The negotiable fields there are the crush and the mesh, which is basically how round it is and how durable it is to keep that hole open. So that was our market.
How did the frac sand market go for you?
Up until I stopped operations at the end of last year, we were the de facto benchmark price in that industry, suite of prices. A couple of really interesting lessons learned on that one. One, I think, was about building a consortium in a market that's moving from surety of supply, when the only thing that matters is get me this raw material so I can continue my operations, to a cash market where there's some price sensitivity. And we entered the market right when we thought it was transitioning there. We were going to do a consortium. And again, I had phenomenal counsel from people in the industry, FIA members, and everyone's just been so helpful along the way. So we had helped creating this consortium. Everything was going really smoothly. Every party on the buy and sell side were interested in this. The funny thing is, any seasoned trader would say that a $20 bid-ask spread is laughable. But when you're in a new market, that was uncomfortable for our guys to commit to that band. They had no idea how much. We had no history. We had no idea how much the price would swing. Another lesson learned, which makes me feel a little silly in hindsight, but sand is millions of years old. Sand never expires. So if it never expires, it's never precious. And then it also that lent to another realization, that thing that I believed could be a commodity because it fit all of our criteria of what makes a physical commodity market. It was never going to get out of the category in the players' minds from a cost center, from just a raw material input to a commodity that needed price risk management. And we as PanXchange needed it to be looked at as a commodity that needs price risk management. And it didn't get there. So the benchmarks are still very useful, especially now since oil field services, the operating costs are so essential for everybody today. But the trading didn't take off.
What was the price variation in the frac sand market?
quite a bit, like significant volatility. And we were finding we did get enough data to realize we thought we were like basically 2 weeks ahead any movement in oil and gas. We were getting there to being that leading indicator. The interesting thing that happened was, which is kind of funny in hindsight, when we started this market in 2018, all the sand was being trucked down to these fracking sites in the Permian. And then someone realized that the sand these things are sitting on top of could work. And then suddenly there was a glut in the industry. And again, as I've studied how markets evolve, there's always a glut. And so, gosh, I mean, I think the boom there was that within 2 years, I think there was something like 22 new mines within a 2-mile radius in the Permian. But that was okay because they were sitting on top of the sand they needed. It was just getting it to the site.
What did PanXchange do after frac sand?
Within 3 weeks of the Farm Bill making hemp, industrialized hemp legal, we had the first suite of benchmark prices. We are still the leading benchmark price provider in the industry and market analyst. And we had the only institutional grade trade platform. The problem with the hemp market is that it started with CBD, with cannabinoids. Instead of starting with what I think is the future of this market, which is grain and fiber. Hemp is a phenomenal animal feed. It's a building materials as far as hempcrete and insulation and so forth. I mean, there are a million uses for the tall fiber stalk, not the bushy cannabinoid plant. And so when everyone came in on the cannabinoids, when I say everyone, I mean bankers, real estate guys, YPO. For some reason, there's a weird amount of YPO people coming into this market, getting on Google, figuring out, or YouTube, how to figure out, how do I grow hemp? And the cannabinoid market, CBD is a great product. It's just tiny. It's an ingredient market. It's a supplement like Ginkgo. It's not a commodity market. And particularly too, because it's also getting name brand recognition and it's a branding thing more than a commodity spec thing. Hemp is grain and fiber. It's tall and skinny, and which makes it a great carbon friendly crop as well. But the problem is between the stigma and the confusion of not knowing the difference between hemp and marijuana, and then all the defaults that happened because cannabinoids was so grossly oversupplied, the U.S. hemp market shrunk to the size of the U.S. broccoli crop, which is also to say it has absolutely no leverage in Washington, which means it's not going to get the push it needs to get to price competitiveness. And that's the challenge that market's facing today.
How big did the hemp trading market get?
It got as big as the cash market in that tiny market could get. So we had our proportional share of the market. The addressable market for PanXchange in any market we went into was never going to be more than roughly 20%, because any good trader is going to put the majority of their deal book in direct deal, in long-term contracts. The cash market is essential for a few reasons, because it's the liquidity hub, it's where you find price discovery, it's the market of last resort, and it's the market, if something goes wrong for someone else, it's the market of opportunity. So it's smaller than the whole, but it's essential. And again, that's why we ended up scaling. So with regard to hemp volume, I'd say we probably got 20% of the cash market when it was doing okay.
What did PanXchange try after hemp?
We're looking for the next new thing. And all roads kept leading to the voluntary carbon market, and specifically nature-based solutions. So in the beginning, I just wanted to use the technology. You know, here at this point, what we want to do is bring transparency and liquidity and get to a benchmark price. And we wanted to do it in ag specifically. So I called all my colleagues at the trade houses and I said, hey, I want to do a consortium. I want you to be my market maker. I'm going to do profit sharing. We're going to get to benchmark. And everyone said, great. I'm tasked with ESG. I don't know what to do. This sounds great. Let's do this. Big group hug, lasted about 2 weeks. And we realized it only lasted 2 weeks because there was no inventory, particularly in the US, of these nature-based carbon credits. So then we started looking around, my team and I, like, why are there no carbon credits in the US? And the reason is for the average farmer, they are incredibly cost prohibitive and unbelievably risky. Being us, we're like, okay, well, we'll create a carbon program. So we created our own methodology, our own legal documentation to bring a high caliber nature-based carbon credit to market. And thus it was is going to be the only fully vertically integrated solution where you can earn your credit, you could sell your credit directly to the buyer. Because already I was finding this strange elitism about the carbon brokerage market. And there were too many people with their hands in there. And by the time the money got back to the farm, it was never enough. So our program, I really believed in it, almost as if everything we've done to date has prepared us for carbon, in the sense that, we've learned, I knew there'd be a glut, but this market's so big, we could weather that storm. But in terms of what does a gold rush look like in the 21st century, we learned that one in hemp. During COVID, I learned that sometimes you have to shoot first and aim later, because if you wait for clarity, it's going to be too late. And the biggest difference is that, unlike all the other markets we did, every single carbon credit has to trade online to avoid double counting and for the traceability of where this thing comes from. So we had it, right? We have this vertically integrated solution that's seamless, where the only small commission is from PanXchange, but it's charged to the buy side. So the farmer's getting his due. It makes economic sense for the farmer. And in fact, when we closed down, we had over 250,000 US-based nature-based credits slated for sale on our platform for this quarter.
You got some foundation support for this program. Can you walk me through how that worked?
After we had created the methodology and started getting traction, we received a 7-figure grant to integrate our program and our technology to a Web 3.0 system, a blockchain system. And they were looking at building an entire ecosystem. This was not just a software vendor blockchain. This was a consortium. This group was founded by over 24 multinationals and banks and Fortune 50 companies. What happened was we got $250,000. We got our first tranche. We knocked all of our goals out of the park. And in fact, getting this entire inventory that was going to get us to revenue positive in a few short months was not even asked of us. And so we were really excited to keep moving forward with this. For reasons I cannot explain, they just strung us along for 6 months. Not saying yes, not saying no, just asking for more detail here and there. And another lesson learned as an entrepreneur, we love grant funding. It's the best kind of funding out there, even though you have to work for it. And I hung on a little too long, hoping that was going to work out. But in the end, I had to shut down because we ran out of funds.
What is the future for PanXchange?
I'm exploring opportunities to sell the technology and sell the data sets. Still doing some consulting work in hemp. Not sure what's next. I am going to shut down the company during this calendar year. As far as what's next for me, I did a little soul searching over the last month, and I'm taking my time with it. I kept thinking I have to decide, do I want to go back into ags? Do I want to stay in carbon? Do I want to go back into energy markets? And I realized that doesn't matter. It's noteworthy that my goal with PanXchange was always to sell it to a company with global infrastructure and become a division where I had the global reach and resources to properly grow a new product or a new market. So for me, I think I'd like to get back into that. Again, it doesn't matter what market. It doesn't really matter the product. If I can get in with a good team, I'd like to know what it's like to grow something with the funding that I've always needed.
What is your biggest disappointment over PanXchange?
A big disappointment of not seeing PanXchange through full fruition or success would be to have one of our benchmark prices become a financial settlement for a derivative contract. And again, for a hot minute, we thought it was feed. And then we did think we could do it with sand. It was around the time that ICE Their new cotton contract was failing. And of course, it's no longer in existence. And I remember when that contract came out, and it was a real head scratcher for me for many reasons. But one was that they picked an origin that was going to be the base price of the futures contract. And then the exchange fixed the spread from other origins. I'm the commodity trader. That's basis trading. That's my job, to fix the basis from and play that basis spread from one origin to another. And I started thinking that it seems to me that the exchanges are catering to the spec, which is understandable. I mean, by volume, they're huge compared to hedgers. But if you don't create a contract that works for the hedger, your specs are trading vapor. So I was excited if we could get sand into a derivative contract where people could use it as a hedge. I mean, again, it's a derivative, it means that it takes the highest common denominator of the quality, the quantity, delivery point of what's traded in that market. It's a ground up thing that I thought we were getting towards building as far as a new derivative contract versus the top down, what does the spec need? So in the end, I did learn that the market just has to be so much bigger than sand ever got to meet regulatory requirements and not be able for any one player to manipulate that market. That was one thing I think as far as creating new commodity markets go and new hedging instruments. I gained a huge appreciation of how big they need to be, how difficult it is to get that groundswell of support to get behind one contract.